Bitcoin is still holding above 88K, but with a Jerome Powell speech looming tomorrow, will we be seeing more downside, or can he help us actually make a rally up? Let's find out. Welcome back to FlexCandle, where we read the candles and flex the moves. Right now it's about 2:50 p.m. Eastern time, and the price of Bitcoin is currently at 88,440. We're gonna start off here with the weekly chart. We're trying to hold above this 100 moving average at $87,506. This candle closes in the next 5 days and 5 hours. The stochastics RSI kind of look like they want to roll over. You guys know I have this in a bear flag that could take us down to about 70K, even 67, 68K around there. Now, I'm thinking maybe what could get us out of this situation. Maybe this could be some type of a double bottom. It's super early to tell. I always like to predict and see into the future to see what could possibly happen. I like to give both scenarios, the bullish and the bearish scenario. The bearish scenario, we already know that bear flag is looming. What's bullish could be, maybe this could be some type of a double bottom. This is the first bottom, then we make a second bottom. By that time, the 50 moving average would be lower, possibly below 100K, and then that's where we touch it. And I mean, a double bottom will bring us back up, possibly to like 105, 106, 110. Maybe we get up there on a wick, maybe we fall back down. It's hard to say, but I would have to say the probability right now is that it looks like we do want to go lower. We head over to the 4-day chart. We see that the stochastics are on the way down. We got rejected off of the 50 here on the RSI, and we're very close to this 200 moving average. That's at 82,210. I really don't see why we wouldn't go at least and touch that, even if it's with a wick. And if we lose this 200 moving average, then we have to look at the 5-day 200 moving average, and that's at 71,463. That'll be pretty much us hitting the measured move of the bear flag. So it's very important that on the 4-day chart, as this resets, we do not lose this 200 moving average. Now on the 3-day chart, this candle closes today in 4 hours, and once again it looks like we might be closing below the 200 moving average. That is bearish. If that ends up happening, we still have a lot more room to come down on the stochastics RSI. On the daily chart, stochastics are still dragging here on the bottom with a small bullish divergence here on the stochastics RSI. The RSI here is still below 50. Could we be doing some type of inverted head and shoulder, left shoulder head? We dip over one more time, right shoulder, and then we pop back up. But remember, I also have this head and shoulder pattern looming here. We have not been able to get back above that 21 moving average, which is at 91,456. If that head and shoulder pattern plays out, that would bring us down to about 78K, pretty much below 80K. So that's also pending at the moment as well. Quick heads up before we continue, I'm about to release the FlexCandle beginner course where I break down how to read candles, structure, indicators, and actually plan trades the right way. If you're interested, email me at flexcandle2025@gmail.com and just write, "I want the course." Anyone who emails me before the launch will get a 50% discount when it drops in the next week or two. Now, the 22-hour chart, yesterday it looked like we were on the way up, and we started doing that. But look, now we're starting to get towards the top. We still do have more room, but we have not been able to get above the 21 moving average. So this is still looking bearish. You can see the head and shoulder pattern here better. On the 12-hour chart, stochastics still on the way up, but we're below the 21 to 200. 8-hour chart, stochastics are starting to get toppy. And as you can see, we have a lot of wicks here. We have not been able to get above the 21 moving average. That's also bearish. Now heading over to the 4-hour chart, we're starting to see that the stochastics RSI are kind of toppy here. We're starting to get a little curvature up, so maybe we could make a move back up, but we've been having a lot of resistance below the 200 moving average, especially after this gigantic wick here, and we've been struggling to get above this 21 moving average. Right now we are getting a candle up, testing this 50 moving average. This candle closes in the next 3 hours and 40 minutes, so let's see if we could finally get above this 200 moving average. If not, I do see us having more downside. We take a look at the 1-hour chart. Stochastics are on the way up. We're testing the 200 moving average at the moment. We're back above 89,180 right now. If we could get back above this 200 moving average and close a couple of candles with strength, maybe we could turn around. I did tell you guys yesterday I could see us going to about 90K, a little bit above it, but then after that, if we can get above that 90K resistance, then we probably are going to roll over. And if we take a look at the 15-minute chart, yesterday I left you guys with a possible diamond pattern here, and I also left you guys with a possible double bottom pattern. The double bottom pattern did play out somewhat. We did not hit the whole measured move, but I still do consider it a winning trade. This is one bottom, two bottoms here. The measured move was pretty much to about 89,358, and as we're speaking right now, we're actually at 89,130. So this is a winning trade, is more than half. If you would have taken profits yesterday, we made it to about 89,000. So whether you took profits yesterday or right now, this is a winning trade for the FlexCandle community, so congratulations. I personally did not take that trade. I felt a little bit more bearish, and I felt like maybe this diamond pattern was going to play out. This measured move takes us to about 86,500. Let's see what ends up happening. The way that the diamond pattern enters is usually the way it comes out. Here we were starting to go sideways. It looked like we were going to roll over, but right now we're getting some type of a pump, and we're getting above the head of this diamond. So let's see if it gets invalidated. This candle still closes in the next 6 minutes. We could always wick down, but if not, maybe this is the start of some type of a pump towards 90k. Overall, guys, I'm still a little bit bearish unless we could break that resistance at 90k. We do have Jerome Powell speaking, so a lot is going to be dictated based on what he says. If he's bearish, then I do see us probably rolling back down to 86k or lower. If he's somehow dovish about things, then maybe we could break the resistance of 90k and then see if we could get above that resistance of 94k. There's a lot of resistance at 90 and 94 and 97 and at 98, so it's going to be an uphill battle, but our first job is to get above that 90k region. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.